Good morning, traders from whichever side of the country world you're watching me from. Welcome to today's morning market call. It being a Friday, blessed day that HFM have provided for us. Quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but don't worry. I'm here to help you look at the markets the right way. My name is Ian Joseph, market analyst at HFM East Africa. And today, once again, it is a beautiful Friday, being the final trading day of the weekly candle. We do have 1 week remaining for the monthly candle to close, and this is the perfect opportunity for you to go over to the HFM platform, look at the promotions that we currently have ongoing, starting off with the Battle of the Elite, whereby it is round 2. You have an opportunity to become Kenya's Don Obiz, whereby there's an opportunity for you to walk home with 650,000 Kenyan shillings. Number 2, 260 Gs. Number 3, 130,000 Kenyan shillings. 10 lucky winners in the lucky draw. And look at the table currently at the moment. Manya FX is up 77.85. We do have Sami who's up 47.65. Meaning if you deposit $100 today and you make only $1, you will be on the leaderboard. Not only that, let's say, for example, you don't have the $100 to start trading on the Battle of the Elite. You can go to the virtual to real demo contest. And this is an opportunity for you whereby there's no risk at all, just exciting rewards. Showcase your trading skills in a risk-free environment. Now, this is what we usually do, whereby number 1 is going to walk home with $500 credited to their account. Number 2 is going to walk home with $300. Number 3 is going to walk home with $100. Last month's winners were Dave Gitonga Moniki. Looking at the leaderboard currently at the moment, we have Juliet who's up an astonishing 9,856.96% on their account, and we have Benson at number 10 with 662. Remember, this is a demo contest, a demo to live, whereby if you happen to be on the leaderboard, you have a chance to be credited live funds into your account. Now, switching gears to the earnings season, whereby it is earnings seasons once again, and we do anticipate a lot of earnings from major companies in the United States of America. Starting off with what is going to be released today, we do have Procter & Gamble who are going to release their earnings before market open. Forgive me, I need to share my screen much better. Okay, whereby PayPal also is going to release their earnings. We have HSBC who's going to release their earnings. This will be on Tuesday, and we do have a lot of companies who are going to release the earnings. Now, looking at it from where we are, the earnings are actually coming out better than we initially anticipated, and we are going to look at the charts. How will this provide you with opportunities to buy or sell into US equities? Currently, at the moment, we have Mercedes-Benz who are going to release their earnings also on the 29th of this month, and a lot of companies. Let's look at Microsoft, for example. We have Starbucks, Meta, Alphabet. We have eBay who are going to release their earnings. Total is not going to be left behind, even Volkswagen and so many more companies. And this is going to affect the prices of the S&P 500, the NASDAQ, the Dow Jones Industrial Average. But looking at it, if you are into Forex trading, how will you start your day? Remember, when you wake up in the morning, you go over to the HFM website. You would want to look at the economic calendar. This is whereby you generate ideas of what you're going to trade. Starting off at exactly 1 a.m. today, we did have Australia releasing their PMI data. Now, PMI is the Purchasing Managers Index, and this is one of the leading indicators that as a trader you would want to pay attention to. Why? Because businesses are the first people to react to market conditions. If there's anything that was to be affected in case of economic downturns, it's going to be the businesses. Now, the Purchasing Managers Index is going to look at managers, and they ask these managers, these are big managers, these are people who have big companies, they ask them, Are you guys hiring currently at the moment? If you have inventory, are you selling your products currently? If these businesses say that, okay, we are not selling at all, it means the economy is generally headed in the wrong direction. But if the data comes out positive, it means that businesses are going to get much more money, which means it's going to be more revenue for the shareholders. These workers are going to be paid. If there's going to be more money in circulation, then technically it means there's going to be a stronger currency as a result. Now, we want to look at the data starting off with what happened in the Australian region, whereby we do have the prelim that was immediately released at 1 a.m. And if I do click on the title here, you can see that this is medium volatility or moderate volatility anticipated. And looking at the short description that we do have here, this is a leading indicator gauging private businesses' activity in Australia for both manufacturing and services. The data is derived from surveys to senior executives. Now, each response is weighted according to the size of the company and its contribution to the manufacturing or services output accounted for by the subsector to which the company does belong to. Now, most important thing here to note is that the index varies between 0 and 100, whereby if the data comes out above 50, it means the economy generally is expanding, which is good for that specific currency. If the data does come out lesser than 50, it means that the economy is generally contracting, and it is not seen as a good sign for the economy. Now, we did receive the data whereby it did come out at 52.6, and if you click on read the official report, it's going to open a new tab whereby this is the official document that was released at that particular moment in time. And as you can see, this is the S&P Global Flash Australia Purchasing Manager Index. Now, keyword here is faster services activity growth contrasts with fall in manufacturing output. We will want to look at the comment from Jingyi Pan, who's the Economics Associate Director at the S&P Global Market Intelligence, who are the people in charge of releasing this information to the public. Now, October's S&P Global Flash Australia PMI data indicated that business activity growth accelerated at the start of the final quarter of 2025. That said, the latest expansion was uneven as faster services activity growth contrasted with a renewed fall in manufacturing output. Okay, very interesting. The manufacturing picture notably worsened with a deepening contraction of goods new orders in October, leading to jobs shedding in the manufacturing sector and margin compression for goods producers. Now, while it was positive to see services activity expanding at a solid pace in October, growth in both services, new businesses, and employment notably did slow down. This was accompanied by falling optimism among service providers, which alongside weakening manufacturing sector, confidence point to a less upbeat view for output growth in the near term. Overall, price pressures eased with output price inflation down to the lowest in 5 years. Keyword here is down to the lowest in 5 years, which helps to keep the central bank on course for further monetary policy easing. And we are going to look at a chart of Australian dollar against the United States dollar. Look at what this means for us traders. Sorry about that. How will you look at these opportunities? How can you execute on this information? How can you make money as a result? And I want to look at the AUD USD. As you can see, ever since prices did open today, we have been seeing the Australian dollar move quite aggressively to the downside as a result of the negative news released that just came out at exactly 1 a.m. today. Now, I have just started a segment whereby if you have any inquiry, any answer that you would want me to look into, kindly put it in the chat section. I'll be glad to digest your questions. Now, going back to the economic calendar, whereby that was Australian dollar at exactly 1 a.m. Now, Japanese yen was not left behind, whereby we did have their national CPI coming out, and we would want to focus on the core CPI, which excludes food and energy, on the year-on-year release to September, whereby we are seeing inflation move to the downside in the Japanese region, whereby last year at this particular moment in time, the inflation was 3.3%. We are looking at the data currently coming in lower at 3.0%. Now, this is quite interesting, whereby we did see Takaichi have a stimulus program whereby she plans to inject $92 billion into the economy, and we want to see how this is going to affect prices of the Japanese yen, whereby if they do have that stimulus in the market, it's going to mean that there's going to be more money into people's pocket, and as a result, we do anticipate the Japanese yen to strengthen in the course of due time, whereby if I can look at a chart of the dollar against the Japanese yen, currently at the moment, we are seeing the dollar gain quite significantly against the Japanese yen ever since the markets did open, and this is the result of the data that we just received. Hello, Chris. Now, looking at it from this perspective, lower inflation, it means technically there is no money in circulation, which is quite interesting, because when you look at it from this perspective, the more currencies are in circulation, the stronger it's going to be. But if the data comes in lower, whereby the inflation is generally moving to the downside, it means that, okay, money is not in circulation, and it is one of the mandates of a central bank. In this particular case, we are looking at Bank of Japan creating this stimulus program whereby they plan to inject money into the economy so that they stimulate people in terms of spending. Now, the Japanese economy currently at the moment is at a pinnacle moment. We are anticipating Bank of Japan to start increasing rates as a result of what we are seeing. Now, if they see that the inflation is going to be headed in the low direction, now Bank of Japan is a very special economy. Why? They do depend more on exports compared to imports. Technically speaking, it thrives as a result of a weaker currency, meaning you're going to require lesser foreign currencies to purchase, let's say, for example, a Toyota. If the Japanese economy is weaker, you're going to use, let's say, for example, I am in Kenya. If I want to buy a vehicle in Japan, it means that my Kenyan shilling is going to be technically stronger than the Japanese yen, which means I am going to get that product at a cheaper price, which makes the Japanese yen one of the most interesting economies in the world as a result of their trade surplus. Now, yesterday's data did come in negative, whereby we did see Japan economy have actually a trade deficit of more than 287 billion yen. Not dollars, but yen, 238 billion yen trade deficit, whereby they did import more than they did export. Hello, Njogu. Welcome to the stream. If you have any question, kindly put it in the chat section. I'll be glad to answer you. Now, that was Japanese yen at exactly 2:30 a.m. in the morning. And then we had Governor Bullock, who released her speech. Now, this is a very interesting lady in the market because she has the keys to the printing machines in the Reserve Bank of Australia. If she does say we are going to lower interest rates, they are going to lower interest rates. If she does say we are going to increase interest rates, they are going to increase interest rates. Now, at exactly 3:05, we did have her release her speech. And I want us to look at this article. Here it is, whereby Australian Central Bank Governor Bullock will comprehensively reform the payment system to strengthen cross-border payment and security resilience. Now, she had 4 key points to make today, whereby the top priority currently at the moment is upgrading Australia's inter-account payment infrastructure, gradually replacing the aging bulk electronic clearing system, and launching an implementation plan by mid-2026 to enable real-time 24/7 payments and rich data support. Now, secondly, the Reserve Bank is working with the industry to improve cross-border payment efficiencies to reduce costs and enhance transparency. What's your take on CPI? We are going to go into that in just a few moments' time. That's a very beautiful question, whereby let's finish with the Australian dollar first. Thirdly, the central bank will continue to invest in fraud prevention and quantum safe encryption upgrades, preparing to migrate the card system to quantum safe protocol. Now, finally, the bank will strengthen system operational resilience to ensure the stability of the payment network amid the development of digital currencies and central bank digital currencies. Very important keyword there, central bank digital currencies, which is the next big thing in the markets. And we can't wait. Personally, I can't wait for that to start being rolled out. Now, we have just received retail data for the British pound at exactly 9 a.m., which was 1 hour, 15 minutes ago, whereby we actually did see the retail sector improving. in the month-on-month to September, whereby we were anticipating a data of negative 0.2%. Actually, the data came in positive at 0.5%. What does this mean for us traders? It means technically the British people are buying at the retail level, whereby as a result, now this is the official document that was released. If you look at it from the IP address here, it is gov.uk, meaning this is the official document that was released at that particular moment in time. Now, overview: the quantity of goods bought in terms of volume in retail sales is estimated to have risen by 0.9% in quarter 3, which is July to September 2025, when compared to the second quarter of this same year. Good weather in July and August helped clothing sales in quarter 3, while non-store retailers showed sustained monthly rises over both quarters. It means people have been buying Balenciagas, people have been buying Louis Vuittons, and this is more money in circulation because those bags are not cheap. As a result of good weather, it means that more British pounds are in circulation, which is anticipated to be a stronger economy for you. What does that mean as a trader? Technically, more long opportunities on the British pound in the short term. Keyword short term. Now, looking at retail sales volume, estimated once again to have risen by 0.5% in September of 2025, following an increase of 0.6% in August of 2025. Computer and telecommunications retailers' sales volume did grow strongly alongside continued growth among non-store retailers, while online jewelers reported strong demand for gold. Once again, our British people are buying gold in terms of jewelry. Very interesting thing to note. Now, we are going to have PMI for the Eurozone, which is going to come out in the next 13 minutes at exactly 10:30. We are going to digest the data. What does this mean? If the PMI, we do have composite, services, and the manufacturing. So when you're looking at manufacturing, this is going to be companies like BMW. This is going to be companies like Volkswagen, Mercedes-Benz. They ask these people, have you been producing vehicles? If they say that we are producing vehicles and we are selling these vehicles, you do anticipate that, yes, number one, these companies are going to make much more profit. Number two, they are going to pay their workers much better. And as a result, we are going to see more money in circulation. Now, that's all about Forex trading. Forex trading is all about understanding how money moves. And we, HFM, provide you with a platform. We have over 1,000 instruments that you can trade on the HFM platform. Go over to the website, pick any account that you would want to trade, kick it into high gear. This is the time to be participating in the markets. Now, we are going to have the combined on the Eurozone in the next 42 minutes, whereby, remember, Germany is part of Euro, but Euro is constituted of several countries, and we are going to have a consolidated value on the PMI, which is going to come out in the next 42 minutes. Now, Mr. Njogu did mention, what do I see about CPI, which is the keyword today. CPI is going to come out in the next 5 hours, 11 minutes, and this is one of the most volatile news releases you can ever have in the financial markets, whereby it's going to look at consumers. Now, when you look at this data, when you look at fundamental analysis, the first thing you ask yourself is, how is it going to affect this particular economy? When you look at the United States of America, these people are very big in terms of spending. They believe in spending more and earning more. If they do spend more, it means they have to earn more. If they don't spend, it means they don't earn more. So if the data comes out positive, it means it's seen as positive for the United States dollar. We are looking at a previous number of 0.4%, a consensus of 0.4%. The actual number has not yet been released. Meaning, if the data comes out greater than 0.4%, it means we need to look for buying opportunities on the dollar. If I'm looking at gold, that means selling gold. While on the other hand, if the data does come out negative, lesser than 0.4%, it means we need to look at selling the dollar. Meaning, if I'm looking at gold, I need to buy more gold. Now, this is going to be very, very important. Once again, why? Because the United States of America is very big in terms of spending. Meaning, if this data comes out positive, it means our people are spending more money. Now, as a trader, this is important. Why? It provides us with the opportunity to look at the markets, find probable scenarios of buying or selling into the markets. Now, there is going to be volatility anticipated during New York session, and it is wise to always practice risk management. Always ensure you know how much money you're putting on the table way before you do pull the trigger. Now, that's going to come out at exactly 3:30. Then we are going to have the CPI. Now, CPI is usually two releases, okay? We are going to have the core CPI and the CPI itself. Now, the core usually excludes food and energy, and the CPI itself usually includes food and energy. What we will want to focus on more as traders is the consumer price index core, which is excluding food and energy, on the year-on-year release, whereby last year, September, a particular time like this, we did see inflation at 3.1%. Now, we are having a consensus of 3.1%. The actual data has not yet been released. Now, we are looking at federal government reducing interest rates in the near future. If this data comes out lower, which is one thing the Fed Reserve essentially wants to see, we might anticipate the interest rate cuts being justified in the markets, okay? But if we see the inflation peak to the upper side, then it means we might see the Fed Reserve holding on to interest rates just quite a little bit longer so that the prices do stabilize. Once again, at exactly 3:30 is going to be very active for us traders in the markets. Now, we are going to have PMI, which once again is one of the leading indicators, leading news releases in the markets in terms of how businesses are reacting to market conditions. Remember, once again, they're going to ask these people, how do you feel about the relative level of business? Are you guys employing currently at the moment? Are you guys having inventory? If you're producing these goods, are you selling these goods? If they say that, okay, the economy is good, it means the currency technically is expected to do good. But if these businesses say that it is not headed in the right direction, then it means the economy is not headed in the right direction. Now, on the economic calendar, the final thing I would want to leave you guys with is we are going to have daylight savings time, okay, this weekend. Beautiful, which is going to be Sunday, October the 22nd, whereby the euro is going to end its DST, the British pound is going to end its DST, and the Swiss franc also is going to end the daylight savings time. What does this mean? Looking at it from this perspective, currently at the moment, Frankfurt, Germany is opening at 9 a.m. They do close at 5 p.m. From next week, Monday, Frankfurt, Germany is now going to open at 8 a.m. They are going to close at 4 p.m. London session is now going to start at exactly 9 a.m. It's going to close at 5 p.m. Then early next month, we are going to see New York session open at 4 p.m. Then we are going to see it close around midnight our local time. So that's one important thing you need to keep at the back of your mind, whereby from next week we are going to see a change in times of the opening hours of these markets. Now, final article I would want us to look through is OPEC is ready to raise oil output if required after the US does sanction Russia. Now, we were looking at this happening early next year, but it's actually coming in earlier than anticipated, whereby OPEC is ready to raise production by rolling back its oil output cuts further if required to address market shortfalls after the US did impose new sanctions on Russian oil majors. Now, in a sharp policy shift by US President Donald Trump, they did target largest oil companies like Lukoil and Rosneft in Washington's toughest measures on Russian businesses since Moscow's invasion of Ukraine. And as a result, we did see prices of oil rise by 5% on Thursday, following the news that also prompted India to consider cutting Russian imports. And this is a quote from Kuwait Minister he does expect any decision to impose sanctions will certainly have a positive impact on prices. What do we mean by this? We do anticipate prices of oil moving further to the downside, and Al-Rumi added that he expects a shift in demand towards the Gulf and Middle East as a result of the sanctions. We are seeing signs right now at the moment. That's going to be it for the articles. Now, I want us to switch gears to the most important part. This is whereby we look at the economic calendar, not the economic calendar, but we look at the MetaTrader. Basically, you have this information. We have digested the data. We are looking at this information, but the question that now you need to ask yourself as a trader, how will I utilize this information to find opportunities in the marketplace? Starting off with gold. Sorry about that. Now, gold, quite interesting to note, we did have one of the biggest drop in prices ever since 1979, whereby we did see gold move more than 8.4% to the downside in less than 37 hours. This was more than 3,700 pips. Astonishing. Really, really massive, whereby we did see massive offloading of positions on gold. Now, we currently don't have the commitment of traders report, and which is something I would want to take a keen look into once the government does come back online. We are looking at potential talks between the Democrats and Republicans. We want to see how that is going to happen. But looking at the charts on a higher perspective, we are seeing gold really, really bullish. And then we had this massive drop in the past few days, whereby once again gold did lose more than 8% of its total value. Now we are looking at this information and asking ourselves, could this be a retracement to the downside for a further continuation to the upper side? Remember, if institutions buy into the market, they would want to offload positions, and could this be profit taking in the markets, or could we see investors and institutions and traders also alike removing now their money from the precious metal and moving it into higher yielding assets, let's say, for example, the 10-year treasuries? Now, this is going to be very important to us, looking at how today's prices are going to close. Looking at it, today's Friday. This is Friday, Thursday, Wednesday, Tuesday. So this is Monday. Now, looking at Monday's opening price, we are well below the current opening price of Monday, which is almost 3.45%, roughly 1,500 pips to the downside from the opening price of Monday, meaning institutions are driving this metal to the downside. If we do get a region that prices do close below this region of support, around the 4,010 region, I would consider looking at more short opportunities, potentially prices going back down to regions, psychological regions. This could be 4,000. This could be 3,900, 3,800, depending on the volatility that we are going to anticipate. While on the other hand, could this be a short-term retracement for a further continuation to the upper side? I would consider looking at buying opportunities if prices do break above 41, 43 region on the precious metal. Silver is currently trading below $50 an ounce after it did make a high of around $55 an ounce. This was back last week on 17th of October, early this week. Late last week, sorry, whereby currently at the moment we are seeing prices well below the 15. This is the 14 period moving average, whereby prices are currently trending to the downside. We are now currently changing character, whereby the markets are now making lower lows, lower highs, lower lows, lower highs. And I do anticipate if prices do break these lows, similar instance to what we are seeing on gold, if we do break below 47.707, I would consider looking at more short opportunities on gold's younger brother. Switching gears to the S&P 500 equities. Now, once again, we are seeing equities rally to the upper side. Why? Because of positive earnings that we are seeing from these companies. And this is going to have an impact, because if these companies are posting big profits, it means that shareholders will want to invest more into these companies. It means that these workers who work in these big companies are going to be paid much more, which means there is going to be more money in circulation as a result of these companies doing well. And looking at the S&P 500, currently at the moment, we are approaching a very, very interesting region of resistance around 6,767, whereby if we do get this candlestick closing well above, as you can see, prices did tap into that region. We are currently retracing. If I do see a candlestick that is going to close well above this region of resistance, then it would act as support in the near future for a further continuation to the upper side. Now, seasonality speaking, keyword here is seasonality speaking. Equities tend to do better towards the end of the year as we are approaching festivities during the final quarter of the year. We do anticipate equities to rally to the upper side. Limo is asking, what's your view on GJ? We shall look at that in just a moment's time. If you have any asset that you would want me to look into, kindly put it in the chat section. Now, that is the US 500. Looking at US 100, which is the NASDAQ, similar instance whereby if we do get this candlestick closing well above this region, remember it is earnings season once again, whereby I do anticipate prices to move to the upper side as a result of the positive earnings that we are seeing from these companies. Now, looking at US 30, similar instance. Now, US 30, US 100, and the S&P 500 are positively correlated, meaning if one does rally to the upper side, there's a high likelihood the others do follow suit. Looking at the US 30, we are well below the region of resistance compared to the NASDAQ and the S&P 500. But once again, if we do get this candlestick closing well above this region, I will consider looking at more net long opportunities. Limo wants us to look at the British pound against the Japanese yen. Now, the Japanese yen, starting with the British pound, we have been seeing, do I have GJ on my chart here? We have been seeing the British pound release their retail earnings today. Retail sales, sorry, to be exact, whereby it did come out positive, meaning the Britons are purchasing at the retail level quite aggressively. While on the other hand, we are looking at the Japanese yen being in a very interesting region in terms of we are anticipating a stimulus program by Bank of Japan as a result of Takaichi, whereby we do anticipate $92 billion being added into the economy, and this is the biggest stimulus program that we have been seeing with the Bank of Japan rolling it out. Now, looking at the price action from a higher perspective going down to a lower time frame, we are seeing prices currently, and this was an interesting region that I was looking at. If I can pull a Fibonacci from this low to this high, you can see how prices came in and tapped into the magical 50 to 61.8 retracement region, and we are currently making higher highs, higher lows. I do anticipate the British pound to gain strength over the Japanese yen in the next of the few trading sessions. Why? Because we are seeing prices make higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Currently, at the moment, we just did break the most recent high around 200 and 3.817 region. If we do get this candlestick closing well above this region, I would consider looking at more net long opportunities. But on the other hand, for us traders, we have to look at both opportunities, whereby if prices do break once again below 203.167, I will consider looking at short opportunities, potentially prices coming back down to these regions of inefficiencies around the 202.660. But prices once again are well above the moving average. You can see prices came back, retraced on the 14-period moving average, and we are currently rejecting that region, meaning cold prices move to the upper side as a result of this information that we are seeing currently ongoing. If there are no more assets that you'll want me to look at, okay, let me look at oil first, and then starting with US oil. Let's start with UK oil. They're positively correlated, both of them. We have been seeing oil price. This is UK 100. I need UK oil. Okay, beautiful. Ever since the sanctions were enacted, in between, so for oil from Russia. Now, before the war, Russia used to supply more than 45% of the energy to Europe. But when the war started, these countries were like, okay, we cannot buy oil from you because, yes, you are giving us the commodity, but we are giving you our money that you are going to fight in other people. So what happened was there was sanctions against Russia, and we have been seeing this escalate. We were anticipating more sanctions from Europe early next year, but we are seeing it actually come out way earlier than we had anticipated, and we are seeing oil prices tick to the upper side. Currently, at the moment, oil prices in the last 68 hours of trading, we have seen oil prices move more than 10% to the upper side as a result of the sanctions of the United States on oil from Russia. We are looking at India also scaling back purchasing oil from Russia, and this is going to affect prices. Seasonality speaking, oil usually moves to the upper side towards winter. Why? Because most of the homes, a lot of energy is now going to be used to heat up these homes. And as a result, there is going to be higher demand for the commodity, meaning prices is likely anticipated to move to the upper side. This was a blessed morning market call. I'm proud to be at your service. The number one goal of a trader, capital preservation. Money usually comes secondary. Always ensure that you calculate risk management before you do enter a position. I shall see you in the next segment. Have a beautiful weekend ahead of you. I do hope, pray, and believe it's going to be a long one, filled with laughter, filled with joy, filled with abundance. Take care of yourselves. My name is Ian Joseph, market analyst at HFM, and I shall see you in the next segment. Cheers.